Hello and welcome to this video on understanding risk and return in investing. In this video, we'll be discussing the key concepts of risk and return and how they impact your investments. Risk is the possibility of loss or uncertainty in the future. When it comes to investing, risk refers to the possibility of losing some or all of your investment. There are several types of investment risk, including market risk. This is risk that the value of your investment will decrease due to changes in the market. Credit risk is the risk that the issuer of a bond or other fixed income investment will default on their payment. Inflation risk that your investment returns will not keep up with inflation and will therefore lose purchasing power over time. There are many strategies for reducing risk that can help you in managing your risk tolerances, and we will look to cover this in future videos, so be sure to subscribe and hit that bell. Return is the profit you make on your investment. This is the juicy part that we all love to see. When it comes to investing, return refers to the income you receive or the increase in value of your investment over time. There are two types of investment return. The first type is capital gains. This is the increase in the value of an investment over time. Capital gains can fall into short-term or long-term capital gains, which each have different tax implications favoured to long-term holding of assets. According to TurboTax, gains from the sale of assets you've held for longer than a year are known as long-term capital gains, and they are typically taxed at lower rates than short-term gains and ordinary income, from 0% to 20% depending on your taxable income. The second is income, which is the regular payments you receive from your investment, such as interest from bonds or dividends from stocks. When it comes to investing, there is a trade-off between risk and return. The higher the risk, the higher the potential return. Conversely, the lower the risk, the lower the potential return. These can generally be represented as blue chip or growth stocks, and each have multiple schools of thought surrounding their analysis. There are several factors that impact the risk and return of your investments, including investment strategy, investment time horizons, and investment diversification. Understanding risk and return is an essential aspect of investing. By considering the trade-off between risk and return and the factors that impact it, you can make informed investment decisions and achieve your long-term financial goals. Thank you for watching, and be sure to subscribe for future content released weekly.